The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to this Nadex webinar, Knockouts and Binary Options on the new Nadex platform. My name is Todd Rich. I am Head of Education over at Nadex, and thank you so much for joining us today. I hope everyone has been staying safe out there in these crazy times. Let's go ahead and jump into the presentation for today. Before I actually get there, I do need to go through this one housekeeping item. Per our compliance department, that trading does involve risk and that all of the trading decisions need to be made solely on your part. So it is your responsibility, and you should be aware that you could lose money trading. So the money that you use when trading should be capital that you can put at risk. I also want to point out that I am going to be using some real examples today. I am going to be on the platform showing you some of our products, and we're going to be doing, looking at opportunities in our markets, whichever product. I don't want you to take anything I say today as a buy or sell recommendation. We are doing this strictly for your educational purposes only, so I am not making any buy or sell recommendations. Very important. All right, now that you've had enough time to take a look at our housekeeping disclaimer item, let's talk about what we're actually going to cover today. I might actually do this in a different order, but I am going to define knockout options. Actually, I'm not even going to call them knockout options. I'm just call them knockouts. We're going to define knockouts. We're going to define binaries. We're going to go through some examples, and I am going to take you around the platform. Before I jump over there, I always like to put this up there, and this always reminds me, we're here to help you. We want you to be successful. If we've got successful customers, then we'll be successful. So anything we can do to help you along your journey. If you've got questions about the markets, if you've got questions about the platform, if you've got questions about your account, reach out to us. Please give us a call. There's our phone number, there's an email address. But what I really want to point out is we've got you here right now. I've got my colleague Sophia in the background. This is an interactive session. So you can click on the questions and ask Sophia questions. In fact, keep her busy. Make sure she's not asleep at the wheel. You can chat with her about anything. If you've got any questions, if I went too quickly, if you want to ask something a little bit more in depth, it's something I glossed over, please interact with Sophia. She's in the background. You've got her right now. Please use her as a resource. What I am going to do now is I am going to jump over to the internet. And, before I do this, I do like to point out, and I like to also make this available. We record all of these sessions. This is being recorded, so you will be able to go back and listen to this again at your leisure and follow along if you like. One place that we put all of our webinars is on our YouTube channel. I would suggest you go to YouTube and look up Nadex and subscribe to us, and you'll be able to follow along. We did a virtual education summit, basic and advanced. All 8 hours of the sessions are here. You can go through them and take a look, and go pick a particular topic that you would like to review, but it's all available there. This session will also be up here. We also do a daily update. Our COO, Travis, does a brief market update, what happened overnight and what to look forward to in the next trading day. Every day for a couple of minutes in the morning, he'll tell you what was going on. And once a week with our partner, Brian Caprice, we do a full-blown market update. That's an hour-long session. That's every Tuesday. So I would encourage you, come take a look at our YouTube channel, and there is plenty of content up here wherever you are in your journey to help you out. I'm also going to point out that on our website, and we love our shiny new website, hopefully you like it as well. On our new website, we're going to be adding to this, but we love the look and the feel of it. But under the learning section, you'll find under webinars, you'll find all of our upcoming webinars. In fact, here's the session we're doing right now. But you'll see where you can register for upcoming webinars, um, as well as find our on-demand archive. If you'd like to, everyone wants to, view this kind of content on demand. Who watches live TV anymore? Everyone has their TiVo or DVR record it, and you consume it in your own time frame. So we do make everything available to you in an archive where you can go ahead and watch them now. Along with our new website, and this is why I wanted to point this out, is we do have a new platform. And I am going to be using that new platform. That doesn't mean the old platform is totally gone. It will be gone one day, but it's probably good to start familiarizing yourself with the new platform, which we think is a cleaner interface. I know change is difficult, but my colleague Adam McCaden did a session yesterday on the new platform, and you can watch that recording if you'd like to be a little bit more interactive about it. We do have another one coming up in a couple of weeks, where you could sign up and join, and that way you'd be able to type questions in and interact with Adam, who is our product and platform specialist. So again, we're here to help you. We make ourselves available, and it's great that we've got that resource available to you. Okay, the other thing I do want to point out is if you want to contact us, it's also available on our website, how to contact us. And we even have this really cool functionality down here where you can chat with us. So again, please reach out to Sophia. If you've got any questions, type them in the questions section, and she should be able to help you out. In fact, go ahead and give her a shout out and just tell her hello. Let her know that you're going to keep her busy at this during this session. Okay, so let's go ahead and log in. I'm going to go ahead up here to log in. When you go to log in, this will bring you to the new platform. Now, if you want to go to the old platform, you still can. It is still available up there. So we're not taking that away entirely, but we are trying to get people to come into this new, cleaner environment. Also notice that I am running in a demo environment. I am not currently in a live environment. Now, we do push as best we can live prices into our demo environment, so you get a good look and feel of what's going on in the markets right now. But your interaction with the demo environment is not going to be the same as a live environment. And if you don't have a demo account, I would actually encourage you to get one. It is a great way to practice, to learn how to navigate around the platform, where to click. It's all here for you, and once you become more familiar with it, it'll get easier to use. But I would suggest that you do it in a demo environment, and you can even do some practice trading, and I'm going to throw in some practice trades today. So let's get into the thick of it. When you come into the new platform, it is broken into 3 sections. Notice we got our markets section over here on the left. Down below is your positions panel. And then in the center, which is we're going to call our workspace, this is where your charts and your order ticket are going to show up. Now, I haven't clicked on anything yet, so this is currently empty. I am going to start with knockouts. I like knockouts because they are what's called a Delta 1 product. And what that means is you're actually trading the price of the underlying. It's very easy and intuitive to understand. If you haven't been in Nadex markets, I'm going to click on knockouts, and notice that we've got knockouts on indices, foreign exchange, and commodities. I'm going to go ahead and click on indices, and we've got them available in the S&P 500, the US 500, the Russell 2000, the small cap, the NASDAQ, the US Tech 100, and the Dow Jones Industrial Average. Let's go ahead today and let's have some fun. Let's play with the NASDAQ. So I'm going to click down, and when you come in here, notice you got a current indicative price of the NASDAQ, where it currently is 10,546, and you'll see 4 different knockout options. I'm going to go ahead and click on one of them just to populate the workspace. And now I am going to go ahead and hide this so it's easier to see uh, a little bit. And I'm going to even get rid of the positions panel down here. Notice those little blue buttons so that we've got a nice big chart to look at. And we can talk about what are we looking at when we're talking about knockouts and how can I trade these things and what do these numbers represent. So first off, I want to point out that there are 4 knockouts and they're designated by these blue lines over on the left-hand side of your chart. If you click on any one of those, it will change the contract that you're looking at. So right now, if I just clicked on this one, and in fact, I'm going to even go all the way up to this very first one. I'm going to click here, and what are we looking at? Okay, we are, and I'm going to click on buy so that I can change the contract in the window here. And here's your order ticket on the right-hand side. Notice that on your chart, you have an indicative price right on the chart. There is also one on your order ticket. And when I click on one, it does give me the range of a knockout, 10,508 to 10,658. All right, and that's the range for the NASDAQ 100 ones. And those are also designated on your chart. Very dark blue lines, very easy to see. And what are those lines? The bottom one is the floor, and the top one is the ceiling. Okay, floor and ceiling, very easy. And when I'm trading a knockout, as I mentioned, it's a Delta 1. I am trading the actual current price of the NASDAQ future. So when I look at this indicative price, this is currently where that is trading. And you'll look at the bid and ask where I could potentially sell if I wanted to click sell, where I could potentially sell, or ask or where I could potentially buy. These prices are right around the indicative price. They will usually be right around the indicative price. So when I see the indicative price is 10,553, well, it's moving actually a little bit here. 550. Notice how the bid-ask spread is right around 10,550. It's 10,549, 10,550, and it's right around the indicative price. Okay. Now, when I buy or when I sell in a knockout, you are making a prediction. You are speculating. Speculating is not a bad idea. That the price of this is either going to be going up or going down. If I think it were going down, I would sell. If I were thinking it was going up, I would buy. Now, what are my parameters around it? What does that floor and ceiling mean? Well, let's say I predicted the NASDAQ was going to go higher. All right, and these are all weekly contracts. This expires in 1 day and 4 hours, and it's also on your order ticket. If I thought NASDAQ were going higher, I could buy one of these. So I'm going to click buy, and I'm actually going to, let's say I wanted to bid a little below the market, so 10,540. I'm going to go ahead and put 10,540. Okay, below the market. I wanted to put a limit order down below. I'm actually going to go ahead and place that order. And I get, hey, your order has been received. Oh, look at that. It already, and look, it came down and I actually ended up buying it. Notice down here, it went from orders to positions and I actually ended up buying one. Okay, great. Okay, that's what I wanted to do anyway. I was just making not a buy, sell, or hold recommendation, a simple, I thought it was going to go higher, so I bought one. Okay, now let's talk about what I just did. I actually was putting one below the market and it dipped down and it actually hit my bid. Great, exciting, and it bounced back up. Whee! Um, because I was predicting that it was going to go higher, I bought one. When I paid 10,540, I knew before I got into the trade what my maximum potential profit and my maximum potential loss were. What is that? How does it calculate that? Since I bought one at 10,540, I have a floor. It is essentially a stop loss. If it trades down, if the NASDAQ gets down to 10,508 and touches it, I will be immediately knocked out of my trade for my maximum potential loss of $128. So I bought one. I was predicting it was going to go higher. If it goes against me and touches 10,508 in the next 1 day and 3 hours, I will get knocked out. But I knew going into it, the most I could potentially lose was $128. Now remember, my prediction was it was going to go higher. Now what happens if I'm right? I have a potential maximum profit of $472. If it goes from 10,000, I paid 10,540. If it trades up to the ceiling and touches it, 10,658. If it touches the ceiling, I would be knocked out of the trade for my maximum potential profit. So in this position, I chose a knockout, all right, with a floor that was close to where I was buying, gave me room to run to the upside. That's why I chose this particular knockout, because I was making a prediction it was going to go higher from here. If I'm right, I know how much I could potentially make maximum. If it goes above 10,658 and keeps going higher, it doesn't matter. I can only make $472 because as soon as it touches 10,658, this product will settle. I would be knocked out for my maximum profit. Thank you very much. If, however, I'm wrong, look, it's selling back down. Now I'm wrong. If it comes down here and touches 10,508, I know I can't lose more than $128. All right, that's where I would get knocked out for a loss. If, let's say you thought it was going to be going lower. I didn't want to start with a long trade. I started with a long trade. If you wanted to go short the NASDAQ, all right, because you think it's going to sell off today and tomorrow, I could have chosen one of these other knockouts, maybe even this one, okay, where the range, my ceiling is only 10,568. And so if I wanted to sell one at, let's say I'd sold one at 10,540 instead of buying one, but now I'm in a different knockout. So realize I am in a different product. If I had taken a short position here, if it traded up to the ceiling, which is now all the way down at 10,568, all right, if I were to sell this and it were to rally and it touches 10,568, I would get knocked out for a loss because I was short one and I'd lose $112. Right? But if it were to continue going lower and get all the way down to 10,418, I could potentially make $488. So that's how the knockout ranges. I love how we put them on our charts and make it very easy for you to see where the floor and ceiling are. So you can choose which knockout suits your opinion the best. If you think it's going up, if you think it's going down, and how do you want to manage that risk? How close to maybe you want to pick one where it's right in the middle, all right, or close to the middle, one of these two. If you thought we're going lower, and remember this is the one we were looking at where you could sell, but you wanted to give yourself a little bit more room to be wrong, you could have potentially chosen this one. And we could see the range changed. Now you could potentially lose $242, but you've given yourself a little bit more headroom if you were selling this so that you wouldn't get knocked out quickly if it were, but you potentially lose. It gives you a little bit more room if you're wrong, but notice your maximum potential profit's been limited because you brought the floor all the way up. So getting into a knockout, you are getting into a defined risk, defined reward product, and you know exactly what the potential outcome is or could be before you even get into the trade. Okay, so that's what I like about knockouts is you can choose the one that you want that suits your risk parameters, and you can then trade around that. Now, what happens if it never touches one of the boundaries in the next 1 day and 3 hours? Now let's take a look at the product, the one that I bought. So let's go back to, I'm going to go ahead and click on this. This is the one that I bought. I've got a long position. I paid 10,540 and it's going against me. And you can see it looks like earlier today it actually was below there. I mean, it looks like we sold off earlier today and then we have rallied back a little bit. All right, let's make that chart a little bit bigger so you can see that. Now, let's assume for a minute that it, from here going forward, it does not touch either one of those boundaries. It doesn't touch the floor or it doesn't touch the ceiling. The way the trade would work is my profit or loss would be, it will settle in 1 day and 3 hours. The NASDAQ 100 will settle at a price. If it settles higher than 10,540, which is where I bought it, so let's say it finishes up at 10,560, I will have a partial profit. All right? I will make $20 if it goes up to 10,560 because I bought it at 10,540. If it settles below 10,540, let's say it never touches 10,508. Let's say it settles down here at 10,520, I would only have a partial loss. Actually, let's just put that so that 10,540, just so we can have this was, I knew my maximum potential loss was 128, but maybe I'll only lose 20. You know, I'd only lose a portion of that. Okay. So that is actually how it works, is you'll have a partial loss or a partial profit based upon where it settles and the price that you actually traded. Now, do I have to wait until I get knocked out or until settlement to trade out of this? All right, I could choose right now and say, you know what? I bought this at 10,540. It's going down. I am wrong. Let's go ahead and get out. I can take a partial loss. I could try to sell it right now at 10,522 and just take a partial loss and get out of it. It's rallying back a little bit right now, but I don't have to wait to get knocked out. I don't have to experience my maximum. Let's put that back in just so we can see what it was. I don't have to experience my, it keeps changing, let's go, 10,540. This is where I traded it. I don't have to experience the full $128 loss. If I feel that I bought one and I was wrong and I want to sell it back out before it touches 10,508, I certainly can. I don't have to, but I know that that's the most I could potentially lose. But if I'm not comfortable with it, right now I'm losing. I do my analysis and think, you know what, we are going to sell off. Let's just go ahead and sell it. 10,527. I'm going to sell one at 10,520. Let's just place an order in there. And now you can see that I do have an order to sell it at 10,527. If it happens to come back up there, I'll just experience a partial loss. Oops, I was wrong. Okay. Your opinion can change. So you can trade just because there's a, oh, and look, I traded. Notice how I have no orders and no positions. So there you have it. I actually, and you can see it's traded back high. I bought it at 10,540. I sold it at 10,527. I took a partial loss because I changed my mind. Okay, that is how knockouts work. You do have a predefined potential maximum loss or a predefined maximum potential profit, but just because there's an expiration associated with the contract, it will settle. You can always choose to trade out of it. So now on the flip side, if I had, I bought one at 10,000, let's buy it back. All right, let's just go ahead and buy one back now because I think it's going to keep going higher. All right, whatever. I placed an order and I bought one. Okay, so now I bought it back. I changed my mind. I paid 10,530 right in here. Okay, great. Now I might just say I'm prepared to risk the 100. And if I get knocked out, I get knocked out. But I also don't want to wait for it to go all the way up to 10,000. I don't think it's going to get back up there. I think it might rally, and I'm just going to pick a price here. Again, not a buy, sell, hope. I think we're going to get back to 10,580 at some point. I can choose to place an order above the market, 10,580. Okay, so now I would sell it if it got back up here. I bought one, and I would take a partial profit if it got out here. I can place that order above the market. And I can see that, yes, I did buy one down here at 10,530-ish, wherever that is. I know that if it touches 10,508, I'm going to take a loss. I knew what I was doing, but I also know that, hey, I'm going to place a working order up above. So if we were to rally and I wasn't here in front of my screen, and it got back to this level where we were at earlier today, I'm sorry, if where we were at earlier today, I'd sell it for a partial profit. So this is how you can trade knockouts. This is why I like knockouts. They're delta one. You are trading the price of the underlying. The price of the underlying you see on the order ticket, you see it on your chart. The price of the bid ask spread around that is going to usually be right around the indicative price, and it's very clean. I know what I'm getting into with maximum potential profit, maximum potential loss, and I can trade around that if I want beforehand. Now, as I mentioned, this was really kind of handy. For instance, I'm going to go over here and show you when in the commodities market, when crude oil was going crazy. If you recall, it actually went negative a couple months ago. Crude oil has been a little less volatile as of late, but a lot of people who were trading in those futures markets. Let's go ahead and take a look at let's take a look at a 3-month chart of oil and move it to an hour. I mean, we can see how volatile oil has been. I mean, it's moved around quite a bit. I mean, but the reason knockouts are kind of handy, unlike other commodities products where you have potential, yes, there's maximum potential, your unlimited profit, but you have unlimited losses with knockouts, and they can be, and the capital required to trade some of those can be fairly hefty, and there could be limitations around what you can access. With Nadex knockouts, you can get into the crude oil market, and because it's very defined risk, very defined reward, you know what you're getting into beforehand, where you could potentially, um, what you could potentially make or what you could potentially lose. Uh, you've got access to those markets. You've got access to those markets in a very clean, defined risk, defined reward way. So that's it with knockouts. Hopefully you've been firing questions in to Sophia in the background, and it looks like you have, and I love it because that's what she's there for. So by all means, uh, please keep firing away questions for her. All right, that's knockouts. I am now going to move over to actually, before I go over to binary options, I would like to touch on our call spread markets. Now, people like knockouts because they are very clean, delta one, it's the price, and I know what I'm looking at. Call spread, now, what some people don't like about knockouts is you could be, you could be playing a little too close with fire. So if it touches that boundary, so for instance, let's just use the oil here for instance. If I thought oil were going to go down and I were to sell this particular oil knockout, notice that yeah, it's very close to that 41.25 ceiling. Yes, I'd get knocked out for a $47 loss, but I want to be short here. But I don't want to get knocked out if it touches that. I still want to kind of stay. I want to have, because I think it's going to be turning here. I do think it's, I think this is a pivot point and it's going to go lower. What call spreads do is they're very similar to knockouts, except it's got a range, just like a knockout does. But if it touches the boundary on one of those ranges, you won't be knocked out of the trade. Okay, so here we go. Here's one where the upper end of the so I want to go short here. It's very close to the 41 and a quarter. It's 41 is my upper level of this call spread. Notice if I sell it, the most I could lose is $26. Okay. The most I can make is, I was right, it goes down, but I won't be knocked out of the trade if it touches the upper boundary or the lower boundary for a profit. you've got more time to be right, but you have to close the position. Or it'll just go to settlement, and your profit and loss would be the difference between where you bought it and where it settled. The difference here is there is a premium baked into the price of the call spread. So notice that if I wanted to go short this, I'd have to sell it all the way down at 40.73 versus a knockout where I would be much closer to the price of the actual indicative underlying. That is that premium that I would be giving up on my sale, or the premium I'd have to pay if I were buying it. There is a premium involved, and that premium will decay as like a traditional option. So call spreads similar to knockouts, not exactly the same because you don't get knocked out. It's not so clean. And because of that, there's a premium associated with the product itself. So it won't trade exactly necessarily around the price of the underlying. And you're going to notice the spread might be a little wider too. So you've got to decide which suits you better, a knockout or a call spread. Now I am going to go ahead and jump over to binary options. Okay. And let's just put something up here. And let's talk about binary options. Okay. In fact, let's just go through the process I just did. I went over to binary options. Notice that we've got indices, foreign exchange, events, commodities. We do these on these ones. All right, so let's go ahead and take a look at commodities. Notice that we've got hourly contracts, daily contracts, weekly contracts. So you're gonna have a little bit more choice in the duration. But we also have some very short-term contracts. In the 20 minutes, we have indice products. Okay, what's going to happen in the next 20 minutes? And I'm going to explain all this to you, or what's going to happen in the next 5 minutes. These are in foreign exchange. Okay, and these can be actually pretty exciting. Let's first start, before I get into it, so I don't look at something that's totally crazy. Let's look at a commodity. I'm going to look at gold, the daily gold contract. Let's actually pick something a little bit better that's going to be closer to the price. Well, let's take a look at crude oil. Let's go back there for a daily binary option. Yeah, we've got some better choices. Here we go. Okay, I'm going to go ahead and hide this, and we don't need a chart. Let's just do a 1-day chart, and we could do this for 5 minutes. Okay, so I am looking at a oil chart, just of today. Actually, what was that, a daily chart? 1 day. There we go. And let's go back to 5 minutes. That's strange. Okay. Actually, I guess we'll leave it at 15 minutes. Okay. Now let's go ahead and talk about what we're looking at here. I am going to get rid of this. What is a binary option? Unlike a knockout or a call spread where you're actually looking at the price of the underlying and trading around the price, a binary option it's binary because in the end it is either worth 0 or 100. That's it. 2 choices. Heads or tails. Yes or no. Yes or no. So when I look at a contract, what I'm actually trading is the probability that this statement will be true. Will crude oil finish higher than $41 a barrel at 2:30 p.m. Eastern today? This expires this expires in 2 hours. Okay, in 2 hours, yes or no. Now you could see earlier it was above $41 a barrel and has sold off. Now, when I'm trading that probability, if you look at the middle between that is the market pricing the probability. So if I were to say, I think it's going to rally back up, I actually could say, you know what? I think it is. I might pay 15. Since a binary is 0 or 100, meaning it's also going to be 0, the probability is 0 or 100 in the end, the price is $0 or $100 in the end. So when I'm trading these probabilities, each probability point is $1. So if I were to try to say, I think oil is going to rally, I've got 2 hours for it to, and since I'm buying, notice on my chart, it shows me where oil would have to settle for this to be a profitable trade. It would have to settle in this blue area. Let's go ahead and place my order. It shows up in the demo environment. I am risking $15. All right, I'm betting $15 out here, and if I were to buy one, and if oil were to settle above $41 a barrel, this contract would go to 100, which means I would make $85. So I'm risking 15 to potentially make 85. Right now, in order for that to happen, one, I'd have to buy it for 15, and yeah, no, I didn't buy one. I'd have to pay 15 for one, and we can see my bid is still there. Remember, this is a demo environment. But in the end, if it does not, if I were to pay 15 and oil were not to settle above 41, so it settles at 41 or below, I would lose my $15. I think we're all kind of familiar with this kind of it's a proposition. It's a proposition, and you're making a prediction. Will this be higher than this price at this time? Yes or no? Now let's just say, for instance, I don't think that's going to happen. Let's go to my order, and let's actually just cancel that order. I'm going to delete it. I'm going to change my mind. All right. I think there's no way it's going to get above that level. So I'm going to go ahead and sell one at, someone keeps doing this. So I'm just going to go ahead. I'm going to sell one at 20. Now, I'm just got my order ticket ready. Notice when I clicked sell, it tells me where oil would have to settle for this to be a profitable trade. Now, if I sold one, because I don't think it's going to get above 41 or it's not going to settle above 41, if I were to sell one for 20, I would potentially make $20 because it would go to 0. That is my goal. If I'm selling one, I want it to go to 0. Because that's how I would make my money. Now, if I were wrong, if this were to rally, all right, and it were to settle above 41, all right, I just actually said that, I just sold one. I think I did. Yeah, I did. Cool. I was waiting for that to happen in the demo market. I actually sold one at 24. Okay. So what am I saying? When I sold one at 24, let's put 24 in there so we can see what it is. If oil does not settle above $41 a barrel in the next 1 hour and 50 minutes, I stand to make $24. If it does settle, I would lose 76. And so the probabilities that you're looking at are the probability. So now down here, because this is what I'd call out of the money, oil is currently trading at 40.84. It has to rally above 41 and settle there for me to be wrong. So, I thought, hey, I'm willing to risk 24. I'm willing to risk 76 to make 24 in the next 2 hours. That's an out of the money contract. And in the money contract down here, notice that this one, the probability is around 75% that this will be true, because it's already above 40.60. It's 24 cents above it. So the market is saying, there's a 75% probability. And if I were to buy one of these for 75, I'd be risking 75 again to potentially make 75. So this is the way, if I think it's going to stay between these two, between 40.60 and 41, I could buy the 40.60, risk 75 to make 25. I could sell the 41 for which I did, and if it stays between, I could end up winning on both of those contracts. I could end up making $50. But if it settles outside of one of those range, I would lose 75 on one of those. So it gets kind of fun with different strategies that you can do with binary options. Now, what I would like to show you, which I'm going to do now, because this oil's not bouncing around a whole lot right now, I want to show you how the price action on this works. And I'd like you to see it. It's kind of like a horse race. So I am going to go to a 5-minute contract. And I'm going to click on, let's just pick the euro US dollar, and I'm going to pick a price, and I'm going to hide this. This contract will settle in the next 3 minutes and 48 seconds. All right, so this is going to be kind of fun. Let's go ahead and do a daily chart. Let's look at a 1 minute chart. This is going to be a little bit better because it's going to be pretty volatile. All right, and let's watch this. We got 3 minutes and 30 seconds to go in this horse race. And the euro US dollar trading 114.16. And we've got the strikes right here, 114.17, 114.19, 114.15. And the probability, since it's right here at 114.17, there's a 50-50 probability that this will finish in the money. So the market's pricing it at 50%. Notice the out of the money ones are trading down around 25%, and the deeper in the money is around 90%. And let's watch what the euro does here. As the euro keeps ticking higher, all right, this one, which was at 20, it will start trading a little higher. This one's now well above 50%. All right, so we're actually watching this in real time as this keeps ticking higher, and you can quickly, and now just because there's an expiration associated with it, just like with the knockouts and the call spreads, I don't have to wait until expiration. If I were to think this is going to tick a little higher, because maybe it's going to go right to 114.19, maybe I pay 25 for one of these, thinking it could go to 100, but if it just goes to 50, I could risk 25, it goes to 50, and I could sell it right back out. A lot of people will think about closing their binary option before it actually goes into settlement. That is because it gets the look at this. This as it started to tick down, the probability of this one being true quickly dropped. We still have a minute and 45, minute and 43 seconds. But you'll watch this start ticking down, because if it's not going to get above 114.19, this will settle at 0. If you pay anything for it, it will go to 0. If you sell it for anything, you'll collect what you sold it for. Notice how this one at 114.17 now is actually getting back to 50-50. We don't know what's going to happen in the next 1 minute and 17 seconds. So the probabilities on these move very quickly as you approach settlement. And in fact, you'll watch at expiration, you'll see with about 20, 25 seconds to go, you won't even be able to trade these. These prices will go blank because no one's willing to take the risk, because it becomes, the price of this can become erratic, and these will go either to 100 or to 0. And they'll do it very quickly. And so I'm going to watch here. I would like to watch this. It's a horse race. And now this hasn't even been that volatile. We've been hovering around this 114.17 level. I mean, sometimes you'll see these start going through multiple different price levels. But today it's a pretty quiet day in the middle of the afternoon. Look, and they went blank. Here we go into the last 17 seconds, just like I said. I don't even think I could. Can I sell that one at 7? I'd love to. Yeah, I sold one at 7. Look at that. That was a quick, easy $7 because it went to 0. Now, remember, this is a demo environment. I can't tell you that you're going to see something like that in a live environment. And notice that after the 5-minute time went, your order ticket disappeared because the contract's all settled, but everything in your chart reset, and now I just simply pick one of these again, and here we go. We have another 5-minute horse race, right? And you can play again. What's going to happen here? Is it going to get above this 114.19? Is it going to stay here at 114.17? It's going to drop down to the 15, and these probabilities will move pretty dynamically as the price of the underlying moves. And remember, it's a probability. Right around here, it's still a 50-50 probability. I don't know what's going to happen. And the ones out of the money and in the money will give you a 10 or 20% likelihood, depending upon what volatility looks like. Hopefully that made sense. Again, I hope you've been asking Sophia questions. The one last thing I would like to do, and I would love to show this because we're pretty happy with our new platform. I'm going to go ahead and go over to Knockouts, and I would encourage you to review one of our sessions that Adam did already, or come to one of our upcoming ones where he does a deep dive into the new functionality of the platform. But one of the best things in our new platform is the charting functionality, and I think that it's something that I really like to showcase. Let's give us a 1 week chart of the S&P 500. Let's go to a 30-minute chart. I'm going to zoom in on it or zoom out some. Okay, there we go. That was over the weekend. And now I chose a knockout just because it was kind of fun. It showed it on the chart. But I would like to show you all these indicators that we've got. If you've got, let's get rid of the positions down here so we can see a little bit more of this. In fact, let's even get rid of the order ticket. Let's really just look at the charts. We've got a lot of different indicators that you can draw straight on your charts. So for instance, if you like the Bollinger Bands, and if you're not sure what any one of these are, there is an education or information button that will give you the basics. You can also go over to our partner, DailyFX, and they've got a lot of education around these particular dailyfx.com, a great resource. Highly recommend that you use it. But it will tell you more about Bollinger Bands and how you can use them. And if you want to populate your chart with them, it'll draw them right on your chart for you. And you can try to use that for your trading decisions. Let's go ahead and put, let's put a product up here on the knockouts where it will help you if you can see what the knockouts are and what some of the indicators are, where you might look to potentially buy or sell. I'm going to go ahead and take the Bollinger Bands off. We've also got a bunch of different drawing tools. So you can draw your own potential, say a horizontal line. You can identify where you think there's going to be support and resistance that you see on the chart. And I just put a horizontal line on there just for fun. And if you see that, maybe it will help you make a determination where you might want to buy or sell because of what you're seeing in the market. All right, so you can actually draw your drawing tools. In fact, there are a lot of different drawing tools where you can put your own little channels. Here, I'm just going to do a little channel here at the bottom end of a chart. And you can set these up where you might be looking for, hey, where am I going to see support and resistance in a channel? Or Fibonacci retracements, where if you see a downward channel, maybe I'm going to put Fibonacci here. I clicked in the upper left-hand corner. I'm going right down. And it's going to, here, I'm going to put it down in the bottom left-hand corner. And then I could zoom in on my chart. So let's go ahead and zoom in on just on that section of the chart that I just did. And it's got my Fibonacci levels on here as well, and it might give you where you might see some support and resistance levels. So again, you can customize these charts any way that you like, and then it'll help you identify potential trading opportunities around the products. I think that's, I know I went a little longer than I normally do, but I want to thank everyone for joining us today. Hopefully you've kept Sophia busy with questions and that she was able to answer them all. I also want to remind you this was recorded. It'll be available on our YouTube channel as well as our website. Please come to more of our webinars. Definitely start consuming more of our recorded content, and reach out to us if you've got any questions or you need any help. And with that, I'm going to say good luck in the markets. Looks like we got, okay, great. Thank you everyone for joining us. We will catch you next time.